see and correlate how these things work, how RSI works with the waves. So this is a typical example of a very full wave cycle. On the left side, you can see it's a typical example of the full wave cycle. On the right side, I have put the elite wave for a reference, and now you can really see how RSI works well with the wave. So,
hello friends, this is Bharat Jhunjhunwala and I welcome you to Speaking Technically. Friend, I'm getting lots of comments and I'm getting lots of mail to start the channel in English. So here I am. I'm presenting my first video in English, and that too on RSI. RSI is a tool that is very close to my heart and it's in my veins. I love RSI. I love trading with RSI and it is the only tool I depend upon. Today we'll discuss how oversold and overbought levels traps us. Generally, 70 levels are called the overbought levels and 30 levels are called the oversold levels. But we are not going to look overbought and oversold the way we have been looking at all through till now. We will change our perspective. We will see how RSI behaves differently in different market situations. So let us jump to our chart and see how we can trade with RSI in a very unconventional way. Before that, friends, if you haven't subscribed to our channel here is the subscription button. Click that and subscribe to our channel. And if you have liked this presentation and if you like the content, please do take pains to comment on the contents and on the video presentation. And also, it will be very nice of you if you can share this video on your Facebook timeline, on your Twitter timeline, or on your LinkedIn channel. It will be great and I will be very thankful to you. So let us dive on our charts and see how we can trade with RSI in a very different manner.
okay, then let's quickly look at some of the ways to use RSI in a very different manner. So it's the most popular public indicator, as we always know that if you ask and if you take a poll among the world traders and ask them what indicator they are using, maximum votes are going to go to the RSI because it's the most popular indicator. And the irony is that 99% people don't know to use how to use RSI basically in the very correct way. So this is the been the popular indicator. It is used incorrectly, widely by people and traders all over the world. It was developed by Wells Wilder in 1978. He published a book, and in that book he mentioned about RSI and he developed it in a very detailed way. But the real usage of RSI was refined by Andrew Cardwell, and he has worked on RSI for last 40 years right now, and he knows the inside out of the RSI very very in a very different way he uses the RSI. So in the conventional usage of what we call RSI as an overbought and oversold indicator was changed by Andrew Cardwell, and even if you refer to Connie Brown and John Hayden, their works are derived from Andrew Cardwell only. So Andrew Cardwell is in a type of authority of RSI, as I can call, right, and his so he's popularly known as the Dr. RSI also. So if you really want to know more about RSI, right, so you can refer to the works of Andrew Cardwell. So generally we see that RSI tops out. What is generally people use RSI as we consider market topping out when RSI reaches at 70 levels, and when it reaches 70 level, either we start to think of getting short in the market, or at least we start to think exiting our long trades. And similarly, we call it a bottom, or people generally call it a bottom somewhere around 30 in the RSI, where they start looking to go long in the market, or at least they are planning to exit their short trade. So this is generally how RSI is used in the conventional way, and Wells Wilder mentioned it. So where we consider 70 as overbought, right? So let us see on a chart whether this holds true or not. So you can see on this chart I have marked levels where RSI has crossed 70 levels multiple number of times, and similarly on this chart you will see wherever it has crossed the 70 levels, the trend has accelerated on the upside, and the uptrend has intensed, right, and the move up has taken taken the trend to a higher level in a more intensified way. So crossing of 70 basically on the upside does not mean the market is getting overbought. It means that the market is just starting a trend It is not a time to book your profits or exit the trade. Rather, it is time to think of getting into the trades and see how to add up your position. Similarly, on this chart, you can notice that the levels where RSI has crossed the 70 mark, and you will see that the trend has moved up with a new zeal on those levels. So one thing is sure after this observation, that 70 levels are not the so-called overbought levels, and we should not really try to get out of the trades at the 70 levels. Similarly, generally 30 levels are considered at oversold levels, and we should plan buying at these entry at these levels, or at least exit our short. So let us see, does it hold true or not. So this is the chart where RSI has crossed the 30 levels multiple times, and you will see how the downtrend or the down move you know have intensified when RSI hits the 30 level. So, calling 30 level an oversold level, or calling 30 levels a place to book profits on your shorts, or be prepared to go long, will be not a good idea at all. This chart proves it. And there are number of charts, and there are number of example. If you can just go to your own charts and see, just open your own charting software and see how whenever RSI had hit the 30 levels and moved below the 30 levels, the selling intensified instead of moving up, or instead of a trend change. So this is how overbought and oversold levels, 30-70 levels basically, are not working when we are talking about RSI as an oversold and overbought threshold. So to overcome this problem, Andrew came up with uh, a concept called the range rules. Now, what does the range rules say? That, see, Andrew has been trading with RSI since last 40 years. Now, what he observed, that a stock or a security has a different character when it is in a bull phase or a bear phase. That means RSI behaves differently. RSI adopts different character when it is in a bull phase or a bear phase. So the normal range, as we say, is 70-30, but when when the market is in uptrend, or when the market is in downtrend, there is a shift in these levels, and there is a shift in the change in the character of the RSI. There is a shift in this level, there is a change in the character of the RSI when the market is in either uptrending or downtrending. So what I call as a public range is 70-30, that everybody knows about it, and on the maximum charting software you will see this, the default levels are 30 and 70, and many people who are using this 70-30. But when the market is in a bullish trend, or when the market is in raging in a bullish trend, then the range, this 70-30 as an overbought and oversold range, shifts to 80 and 40 levels. So for a bull market, generally 80 levels become the overbought level, and 40 levels become the oversold levels. So this is how it should be interpreted. We'll see many examples on the chart. Similarly, when there is a intensified selling and the bear market is intensified, similarly the overbought and oversold level shifts from 30-70 to 60 and 20. So in the bear market, when the market is falling down, 60 levels become the overbought level, and 20 levels become the oversold level. So these are the ranges that it generally adopts. So this is how the range is shifted from bull to bear. From 30 to 70, in the bull market, 80-40 becomes the threshold level, and in the bear market, the 60-20 levels become the threshold levels. And generally, oversold and overbought levels are placed on 80-20 rather than on 70-30, in respect to the type of market we are trading.
Trading in the financial market doesn't have to be a difficult and uncertain venture. You can learn and achieve much more with the Trader's Classroom. Trader's Classroom, a new age way to achieve excellence in trading, is a brainchild of Bharat, the founding director of ProRSI, among other fronts. The solution focuses primarily on technical analysis. As a trader, Trader's Classroom helps you take your knowledge and proficiency to the next level with high-quality resources made available every week. Solutions to bottlenecks in the trading industry with practical examples and real market scenarios. Trading Coaches of this century teaches you what you want, but never put emphasis on what you need. Here at ProRSI, Trader's Classroom focuses on the tools and tactics that you need to be a successful trader. With Trader's Classroom, you will achieve technical proficiency to unlock higher returns in trading, Be able to design uniquely with an end-to-end scope. Have access to real-time mentoring over the course of the next 3 months, as Bharat helps you explore market opportunities with higher dynamism. Have access to seamless resources at your disposal so the learning never stops. Get one-click instant access to the previous 3-month lesson. Enjoy higher interactivity, group experience, and more fun when Bharat goes live, where he answers your questions about the day's lesson in real time, with a higher level of personalization. Are you a trader currently looking to expand your opportunities and increase your earnings? Then join this 3-month Traders Classroom training with Bharat and enjoy a pack of marvel. Start today, earn tomorrow.
Single chart that, see, this zone A is the bull range. When the markets are making higher highs or they are moving up, right, then the RSI will generally oscillate between 80 and 40 levels. Now this is the way RSI will move. Similarly, when there is a downtrend or intensified selling, then 60 and 20 levels will be the threshold levels, and RSI will all maximum time go and face resistance at the 60 level and can come down and take support at the 20 level. So these 60 and 20 level becomes the oversold and overbought levels. So we should be keeping this in mind, and you can go and look at the chart. The Bitcoin chart, if you see, it's a perfect example of how range is shifting, and now how from a super uptrend, when the RSI was not even crossing the 50 levels, it suddenly it changed the trend, and now it is trading between 60-20, and now RSI is not able to cross 50 levels on the upside, right? So this is a typical change in RSI behavior. So here on this chart, you can see on the left hand side the trend is raising up. It's in a bullish trend, and you can see how RSI has been taking support at the 60 levels. So this is the 60 levels. I have marked the 60 levels and 40 levels as the reference level. So you can see how the RSI is moving between 60 and 40 levels. It is not crossing the 40 levels, or it is not giving a cross below the 40 levels. It is just staying above the 50 levels. Just tells us that the market is in a strong up move. There is no there is no attempt to come down to the 40 levels or close below the 40 levels. So this is a typical example how the RSI is shifting range, or how, from 70-30 to now RSI is trading between 80-40 levels in the bull market. And similarly, during this phase, you will see that RSI is not able to cross the 60 levels. Right, it's taking resistance around in and around 60 levels and again turning down. So at that time, you can say that the market is bearish. Only by looking at the charts you will be able to tell it. If you look at the RSI, only you can tell whether the market is bullish or bearish. Similarly, there is a range shift again here on this phase, and you will see that RSI is not even going below the 50 levels, and it is curling up from the 50 levels to turn up again, and it tells us that the market is in a bullish range again. So, and again on the right hand side you will see that the range has shifted. So these points are called range shift points, and where market shifts from bullish nature to the bearish natures. So these are the range shift points, and this is how RSI is behaving, and RSI behaves this way only. So again on this chart you will see how the full no when the markets were up, the RSI was trading between 80 and 40 levels. There was RSI didn't penetrated below 40 levels. It indicates a strong trend up, and you will see how the market was raising up. Similarly, when the market fell down, started to fall down, RSI shifted range and it was not able to cross the 60 levels, and this thing happened. Then again the RSI changes the range and started to move above 60 and 40, and again there is this thing, and then again followed by a range shift where RSI is not crossing 60 levels and taking resistance at the 60 level and moving down again. So this is the way basically things are treated when we are talking about RSI and range shift. This is a typical behavior of RSI during the ranging. Now if you are a student of Elliott wave, you can see and correlate how these things work, how RSI works with the waves. So this is a typical example of a very full wave cycle. On the left side you can see it's a typical example of the full wave cycle. On the right side I have put the Elliott wave for a reference, and now you can really see how RSI works well with the wave. So Elliott wave is a very subjective thing, right? You have to be very subjective and in the waves, right? So whenever you are using RSI, you are dragging out the subjectivity from the markets. Like when you are trading with waves, this is the biggest problem that traders with waves are having, that there are too many scenarios at the time. Now we can say that we may consider sometime this is a wave C, we may consider it is a wave 3, we may consider it is a wave B or wave X, right? So there are too many scenarios when we are trading in waves, and it is the analysis is subjective. But when we talk about RSI, we are not subjective at all, right? We are very much sure that the trend has changed, there is a range shift, there are signals, and whether you should buy and sell. Okay, so this is a quite comparative chart that tells us about wave study and
So
RSI.
this was it, guys, and I am very sure now that you are ready, almost ready to avoid the overbought and oversold trap. Yes, you won't get out of the market early, and you won't be trapped with the oversold and overbought levels of 70-30. Moving ahead, we will be diving into more concepts. We will be seeing how the RSI shifts its range in different market conditions, how divergence works, how reversal works, and how we can use RSI in our daily trading. We will see some special setups on trading divergence, and we will also see a special swing setup on RSI in our coming session. So if you don't want to miss all this, do not forget to subscribe to our channel and do comment how do you like our content. By Bharat Jhunjhunwala signing off, and I'll see you soon. Before that, keep earning and keep learning. Learning is more important. Bye bye and have a good day.